Let's talk bear market opportunities today. As traders, we always want to be prepared. Yes, only the NASDAQ composite is officially, if you want to talk about it, in a bear market state, but others still on the way down, guys. So let's talk a little bit about how we can profit when markets are going down and not to the upside, regardless of your time frame here. If you're, an intraday trader, there's lots of volatility and lots of opportunity, but on a longer term basis, some ideas as well.
Yeah, I think from the most simplistic thing to be able to say is, okay, well, if you're a day trader or a short-term trader, get some short ideas. Like setups that work to the long side can also be applied to shorts, whether it's, pre-market breakouts, if it's dip and rip for longs, and it's short, then it's, short the pop at the open and fade it off pre-market highs. That's the easy thing you can do. But not everybody is in that short time frame. Sometimes you're thinking a little bit longer swings or maybe just hiding out a little bit. So make that distinction. First, distinguish what it is that you're doing. And then if you're trading within a sector, let's say you have money in a particular sector, you've been making money going long, buying dips and things like AMC and NVIDIA, understand the defensive names within that sector. So you go to something like an Intel, which in this environment is going to be a good place to hide money when you're trying to sort. Let's say you're trading heavily in the chip space. Well, something like this, which is more of a dividend stock, it's got a lower PE just in that low single digits, so reasonably priced. It's not going to fall. Today, you have NVIDIA down over 3%. You have, as we're doing this, and AMD down close to 3%. Well, Intel down 1%, and that's going to be sort of par for the course, and it plays both ways. When we're in the monster bear market, Intel's not going to appreciate as much, but you do get the dividend with it, so it gives you a place to hide cash while you're maneuvering, especially within a space. So you have that understanding of what the different types of names are in an individual sector, and the other side of it, of course, becomes, well, when you are trading a little bit more actively, like what is it that you can do when we're in some downward markets, John?
Yeah, no, there's good look there. I mean, you always want to be diversified and have some kind of a dividend-paying stock in there, right? And so pick one that's in a good sector like that Intel, so that when it does, come back through, that's something that you can hit. Look, and in today's world, we have ETFs, right? And we have inverted ETFs. Neil mentioned those briefly, and I'll just talk about the SQQ here. This is actually 3 times the move on the NASDAQ. So let's just talk about this quickly, because some people don't, they try to understand it. It's a little bit complicated. They use options and things like that. Look at the NASDAQ down 2%, SQ up 6, right? So you are going to get that inverted relationship. And I don't think that there's anything wrong with hedging a little bit. If we go over to the daily chart here for the SQQ, which is right here, you're going to see they had a reverse split. So forget about all these crazy moves that's recently just happened. Actually, I don't even know. They must have just done it, because we don't get that in here. It's up to 33. We just did a reverse split, so this is going to be hard to see. Let me pull up E-signal here quickly so I can talk about that a little bit. Oh, yeah, there it is. So the NASDAQ was huge coming back in. Let me just zoom this in one more time just to have a quick look. Even in the last little bit, Brendan, is what we're trying to get at here, is the last little couple days here. We were down to 36, 37, some of these bottoms on SQQ, and then just in a couple days, this is from September, so $35. If you really thought the writing was on the wall here and say, you know what, we're probably going to start heading up, interest rates, so on and so forth. And I think it was, around U.S. Thanksgiving that sort of hawkish talk started to happen. Well, you could have been long about $30 on the SQQ. Today, you're up to $35, $36, right? So there's your sort of 20% bump in an inverted ETF. So that's something you could do, but be very, very careful, because the thing about an SQQ is, forget about that move there. It just did reverse split. So it was actually a little bit of a bad example for this on our charting, but it's 3 times. So what I'm giving you guys right now is 3 times the leverage. So you don't want to be overexposed to something like this in case you don't get the timing right, because if today's the bottom in the NASDAQ, then yeah, this is going to be ripping 3% tomorrow, or whatever it is. The NASDAQ rips 3, this thing's going to be down 9. So you got to watch out, be very, very careful. But SQQ, and there's a few other ones. I'm just focusing on NASDAQ here, as it's the one going down. You could also look at the VIX, which might be better for another evergreen video.
Just to break that down, guys, quickly into a more sector-specific type of idea. We've talked about the enormous strength in banks going into this last earnings reporting season that hasn't been great so far, let's be honest. And I want to talk about oil as well. So here's one, again, on the inverted side, same story. FAZ on the NYSE Arca exchange, 3 times bear ETF for the banks. Up 5.5% today, 2 days in a row here to the upside. And then this drip as well. I mean, this move in oil continues to the upside, so this thing's still kind of grinding lower. But if and when, this is a 2 times bear ETF, if and when we do get this pullback, we can even break this kind of concept down into sector-specific type ideas.
Yes, 100%. And that's sort of the thing. Like, understand that there's more sectors out there than technology is where it starts. And then even if you're in technology, the different types of names in there. And there's simply no denying the run that oil has been on. And you can do, look, you can also just diversify yourself into some sort of strong energy names, whether you like an XOM, whether you like an Oxy. There's plenty out there. And everyone's going to talk about how energy has been on a big run. And it's a difficult thing. Sometimes when you've made so much in other sectors and tech has gone on such a big run, it can be a difficult thing to jump into something and look at it at the tops. But a lot of times that's what you have to do when there's a rotation. So, ultimately you cannot ignore energy. I think the banks are going to give you some value as they started to pull back in, and the regional one's probably going to do a little better in this environment. And we are in a different environment. There's no ifs, ands, or buts about it. And the other thing you want to consider, sometimes it's about not losing money, not being at the front of the line to buy the stocks that are still ridiculously overvalued. That's another thing that you want to consider in this bear market. If it still has an insane valuation, let it drop further.
I mean, and just quickly, one other thing that I've just did, and you can follow me on Twitter where I be as honest as I can with my positions. When we had this one bump up here, one random day on July 11th, I sold this thing for 86 or 87 bucks, thinking that, hey, this name has just been beat down. They're one of those names that don't work in this environment. We've done our research, and look at Teladoc, man. Out at 87, it's now down to 76. So if there are names that you like, I mean, the thing is, what could you do in a bear market? And that is sell names you don't like that you feel are going down further and buy them back at a much, much discounted price. So I'm not even on the bid to some of these names. There's tons of them right now. DraftKings, Teladoc. I mean, you just go through it. Even the ARC ETF. So there's tons of stuff to do, Brendan. And that's why we love this business.
If you are active in this market, you always have to be prepared. There's a few ideas, guys, for profiting in a bear market.